Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the DealQuest podcast. Let's get started. DealQuest listeners, this is a solo cast, and this week I wanted to go through a report by JP Morgan where they did an analysis of global M&A for mid-year 2025, and they titled it Navigating Uncertainty, which I think is a pretty appropriate title, at least as of the time of the report. And there's some very interesting things in the global M&A market, some of which obviously may be more applicable across different jurisdictions and industries. Others are more specific to specific geographies or industries. But I want to hit some of the highlights and interesting facts here because, as I've said often in the past, the nature of the global M&A market is, first of all, interesting because a lot of us do international deals. But even for those who do domestic deals or smaller deals that are not international, some of these trends sometimes indicative of what happens in other deal markets and smaller deal markets, sometimes not, but it's good to know about. And frankly, listen, in this day and age, there are many more than the huge companies that do cross-border transactions. So, and that are impacted by transactions that are done in other countries, even if they're not involved in them. Maybe it affects their supply chain, their manufacturers, if they're getting acquired, things like that. So it's always interesting to know. The interesting point that they started out with was that at the beginning of 2025, global markets were initially buoyed by optimism, right? There was a surge, there was an anticipation of a surge in M&A activity. There was a feeling that there's a pro-business operating environment. Inflation was coming down, interest rates looked like they were coming down, and there was a general optimism across international markets. The interesting part was that optimism, they say, was soon tempered by trade and geopolitical uncertainty. And I don't think that's a surprise to anybody. I've talked on this podcast generally, whether it's about various, policies in the U.S., uncertainty around trade, things like that, or uncertainty, economic uncertainty in general, that the worst thing for the deal market is uncertainty. And it's worse than having certainty of something you don't like. If you're against the tariffs and they put a 15 or 30% tariff in place, at least if that's in place, you know what the game is. Whereas before, you don't know whether it's going to be 15 or 50. It creates uncertainty. So they recognize that. They also talked about there were substantial policy shifts around the globe, actually, in the first half that affected things. And also, there was a sense that a recession risk rose by the mid first half. So in the beginning, I think people were more optimistic. And then as some of this uncertainty and issues and economic and world political and war and, all these things happen, there was continued and didn't get resolved. It was a thinking that there was a higher risk of a recession, which of course also can slow deals, although it can accelerate opportunities in other areas. And, they just felt that the economic fundamentals was softening and market volatility had subsided. And then what happened was, as it subsided, and then trade agreements began to take shape, right? Again, you may like them, you may not like them, but there have been a number of trade agreements that have been announced, so that creates more certainty. And then there was some more cautious optimism that came out of that start of more certainty. In terms of the types of transactions, they talked about the fact that there was an increase in take-private transactions. So that's where company is bought out, usually by private equity or some other big investor, and taken private off the public markets. Cross-border transactions, so a lot of international stuff. That's also not surprising, especially if people and companies are trying to anticipate some of the changing landscape. And if tariffs are going to be high somewhere else, maybe they want to acquire a company in another country where the tariff rates are lower. And I don't want to make this all about tariffs. I just use it as an example because it's the biggest uncertainty that's become certain jurisdictions over time. But the changing landscape could encourage actually cross-border transactions like that and a shift in deal size to larger transactions. And that's also not surprising because in a somewhat uncertain environment, the bigger players, it's easier for them to take a level of risk and do the analysis and mitigate against that risk than it is smaller players in uncertain environments. They also talked about, the emerging deal types. One is the one I've been harping on, which is they say it's tariff-driven expansion. They talk about sector consolidation, tech-enabled growth, and new cross-border strategic alliances are shaping the global M&A market. So those cross-border strategic alliances can be in relationship to some of the things we talked about. And then tech-enabled growth. I mean, we can't talk about any kind of entrepreneurial growth, business growth deals without obviously mentioning the impact of AI, which we'll talk about a little more later. They're predicting that the US markets will maintain their resilience and continue to offer premium valuations. Despite the higher valuations, they think that deal activity will persist, driven by both domestic and cross border inbound activity. So that would mean folks coming to the US to do deals. And then also, they expect the Asia Pacific region to have robust activity, particularly Japan, India, Korea, and Australia. They're not the only one, but that's sort of the region that they are most bullish on, besides the United States. So that's interesting as well for those who are in those jurisdictions and or are looking to do some cross-border deals or at least to learn about opportunities there. They say as tariff discussions progressed and markets settled, the global M&A volumes hit $2.2 trillion, which is up 27% year over year. So that's a pretty big jump. Now, obviously, activity in a lot of these sectors was lower in the past couple of years. So it's coming up from a place where there was some headwinds previously with higher interest rates and inflation and things like that. And then they sort of broke it down by quarters. So the first quarter began sluggish, but ended strong in March. And so really March actually was 50% of first quarter volume. So, it's one third of the year, but it counted 50% of the deals. And then interestingly, the momentum did initially carry into the second quarter as the quote unquote Liberation Day tariffs hampered April volumes. But then as trade policy began to take shape, the volumes rebounded. And in the last the last 2 months of Q2, the mega deals buoyed the volume. So there were a lot of bigger deals that increased volume and obviously total deal value. And they break that down into sort of mega deals and different size deals. But that's the biggest message is the bigger deals. So the total volume was up 27%, as we said, at 2.2 trillion. There was a 57% increase in the number of mega deals. So you can see, I mean, that's huge. 72% of the volumes consisted of deals greater than 1 billion, which is a 20-year high. So that's not just increase over the last couple of years. That's significant over a 20-year period. And then there's a 92% increase in Asia Pacific APAC activity, and then 24% increase across border volumes. That's sort of the numbers behind some of the general trends that I talked about in this solo cast. Let's talk about sectors over year growth. Technology up 42%. Again, not shocking. And they, of course, attribute not all of that, but a chunk of it to AI. Remains the focal point across VC and growth investments and strategic M&A. And then other areas that were up were diversified industries, financial institutions. Diversified is up 41%, consumer and retail 32%, power and renewables up 14%, media and communications up 51%. That's interesting. And I guess in part that's because the media industry's landscape has become tougher. So it's not surprising maybe that there's consolidation there. Real estate was up much smaller amount, 3%. And then you've got healthcare and energy, which were both down. Healthcare just 3%, energy 9% in terms of sectors year over year growth or declines. There's a footnote in the report here, or a little, not a footnote, but a little blurb here by one of the charts. That was interesting. It says excluding Chinese government capital injections, strategic minority stakes in the first half surged 21% above the 10-year half-yearly average of 288 billion, marking a 41% year-over-year increase. Minority investment stakes is definitely a growing trend internationally. Interestingly, domestically in the financial services space, especially in wealth management, which is an area we do a lot of deals on, there's a lot of minority investment deals as well. They have another sort of chart which has numbers of the different. I'm not going to go through them in detail of the different cross-border volume, but the headline on it, which is interesting, says despite regulatory complexity and protectionism, cross-border activity persisted. And that's an interesting thing to sort of follow because you would think that additional regulations and protectionism, you might logically think that that would decrease cross-border activity because it may get harder and more expensive to get done. But there are also other ways where it encourages it to try to better position certain things. So I would encourage you to take a look at the report itself. I mean, I'm hitting some of the highlights, but there's much more detail in this report than I'm going to cover here. And obviously, I want to give credit to the original source from J.P. Morgan here. They break down, for example, more specific things that affect cross-border transactions and different policies in different countries and different trends in different countries in terms of regulation, in terms of additional scrutiny, in terms of various other things. So you definitely want to take a look at the report itself. If any of this is of interest to you. They have a breakdown also of regional nuances paving the way for M&A activity. So this is less about the regulatory scheme or protectionism or any of that, but just more about what's happening in various countries. So, as an example, they talk about political instability in Europe may lead to opportunities in industrials, automotive, and consumer retail, specifically in France and Germany, right? Australia, global consolidation in natural resources provides a steady stream of inbound deal flow in energy and commodities. So those are the kind of things, if you want to hear what some of the trends are in specific areas, definitely delve deeper into the report here. And then JP Morgan has some data and information that is also interesting and worth looking into. And the headline here is interesting in terms of the LATAM region. And they say strong fundamentals and attractive valuations overcoming economic and political noise. That's interesting that there's fundamental business positives that are, overcoming certain economic and political issues. Of course, there is an analysis of AI-driven transformation fueling growth in data center investments. I mean, if you have not heard about the growth in AI and also the growth in necessity of building data centers, then you're probably living under a rock, so to speak. But the amount of energy that's going to be needed for AI over the next number of years. I mean, I'm going to pick out their particular thing on this because I think it's very interesting. I say AI energy requirements are driving a surge in data center investments, with tech companies planning 1 trillion, that's a T, in spending over the next 5 years. Data center capacity needs to increase 100-fold. That's not 100%. That's 100-fold, meaning 100 times what it is now over the next decade to meet AI demands, leading to the highest load growth in 50 years. So that's obviously fascinating, and it's interesting to look at the places where they can put data centers and where there's energy available and who wants them, who doesn't want them, and this kind of thing can really significantly change economic activity generally and deal flow generally, depending upon where these data centers are built and where the capital, towards those go into, get invested. The other thing they analyze is drivers of activity and valuation differential. And the headline here is that equity investors ascribe a premium for size and capital structure conservatism. So, this is consistent with them saying that the deal size has gone up, right? There are more bigger deals. I think in uncertain times, companies that are bigger, companies that have more conservative capital structures, right? Less debt, things like that, are less risky. And it's not surprising that that's where the money is flowing, especially since there is so much money available and it needs to be deployed. Slide on the fact that uncertainty is here to stay. So although they did talk about this optimism in the beginning of the year, and then they talked about how uncertainty around trade and protectionism and things like that came in, and that did slow things for a while, but then it picked up. But that certain things were getting solidified, like the tariff deals. You think that they might be anticipating highest certainty, but the headline here is uncertainty is here to stay. And that is, they talk about uncertainty resulting from shifts in trade, macroeconomic policy, geopolitics, and then currency and fluctuations, recessionary fears. The interesting part is they're talking about how all of this uncertainty is probably going to still be around, that there is some cautiousness around that. But despite that, the markets have been unbelievably resilient, and that they think they'll continue to be resilient despite the uncertainty. Types of uncertainty they talk about: trade and tariffs, economic uncertainty around shifting investor confidence and fear of recession and economic slowdown, rates and inflation, and pressures that from tariffs that might push inflation back up, currency fluctuations, and that tends to happen when there's more dynamic or changing markets. The regulatory environment. There's a lot of places with this high scrutiny going into these deals, which could be a risk. Geopolitical risk influencing, especially cross-border deals. And then an evolution of U.S. foreign policy. America first, America alone, and pullback of aid and things like that in terms of international relations and economic influence. But again, I mean, the bigger message, and listen, I'm not reporting this to say that JP Morgan's view on it is the be all and end all, or that it's not. Obviously, predictions are only as good as the analysis and what is known at the time that they're made, even if they are good at the time they're made, but they can be a significant event, whether that's geopolitical, whether that's economic, whether that's retaliatory tariffs, whatever, that can change things. But this is what they're seeing at this point. And listen, I think it's useful to see. I think that they are both reporting on what they're analyzing and measuring. And then, you get into this cycle where major players look at these kind of reports, and if they seem to be positive, it could be a bit of a self-fulfilling prophecy and vice versa. But, they only have a certain amount of impact. So listen, hopefully that was useful information at a high level. Again, I encourage you to check out the full report. Again, so that it is the JP Morgan 2025 Global M&A Mid-Year Outlook, and it's entitled Navigating Uncertainty. And I guess, the fundamental message is uncertainties are going to continue, and the markets have been pretty resilient, and hopefully they'll continue to be. So I hope your markets continue to be resilient, or have been resilient, and you're getting deals done. Until next week, Corey Kupfer signing off. Thanks.
Thank you for joining me on this episode of Deal Quest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to kupferlaw.com. That's kupferlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your Deal Quest will bring.